go to your ideal customer profile. When you move away from your ideal customer profile, you're being burned. The reason I didn't want to sell to the big farmers is because I sold before to enterprises, $5 million deals and others. It takes 18 months, and there's no way that a small startup will start by selling to those. You need those that are susceptible to change. You need those that are innovators. You need those that will be patient when it's not going to work. And it's not going to work at the beginning. So you need those as your first customers. Hi, Alex. Thank you for having me. My name is Liron Yanay. I'm the CEO of AgriPass Robotics. AgriPass has been here for 3 years and by now achieved great traction and market access. AgriPass is focused on solving one of the major problems in agriculture and food production, food safety today, which is weed control. And we're doing that by human-inspired technology and AI, using contextual intelligence to mimic a way a person work in the field. We've recently raised our seed round and raised today $7.5 million. Moving forward fast and strong and looking forward to have more great partners coming on board.
Yeah, well, really happy to see this round come together and heard amazing things about you. How did you guys meet your lead investor? What's the background to that on the seed round?
Well, I think that, that comes into, who are your investors? Who are your partners? I said we're looking for additional partners to join us because we see our investors as those that care about the company, understand what the company vision, where we need to go, and help us find the right match to continue in our journey. And we met Harbor Venture Consulting and David Sauer, which is the CEO of Harbor Venture Consulting, through our board, through our chair, Dr. Sharon Chachem, which is a very known entrepreneur in the biotech industry. And through her connections and additional connections from one to the second, you get more meetings. And eventually we met David. It was in January 2025. In July, we were ready to conclude the seed round and eventually signed it towards the end of the year. So it takes time. It takes time to validate. And it takes time, even if you have the people around you, representing and recommending you. Eventually, it takes time to sign. And we're very happy to have Arbor Venture as the lead of this round, joining E44 Climate as the two major forces, because they represent family offices, some from US, a lot from Latin America, are really strong ones, and some of them from food and some of them from agriculture. So we got this validated through our investors, those that got into AgriPass. And now in these days, we're working together to get to new markets like Argentina and others very strategically. So lead investor Harbor Venture took us a while to get them on board, and representing family offices and other capital that is aligned with what AgriPass is doing.
So the play there is that you had a trustworthy relationship with your chairman of the board, who herself is a well-known entrepreneur and leader in biotech. She felt like this partner could be a relevant fit. Did she know that there were agri-food tech and agri family offices were part of Harbor? Did she already know that? Like, because it sounds like if you look at the website of Harbor, it's like, where's the connection necessarily? You don't really need, like, from your own research outside, you wouldn't know. So what did she know that maybe somebody outside would not know?
Harbor are institutional investors for family offices. So what I like about Harbor and David, they bring their financial aspect. So they help us build the company towards the next phase from now. So we're thinking finance, we're thinking funding. Everything is, also in the process of investing in AgriPass. We build the budgets, we build the predictions, the conversations. Those were really not something you usually see in a pre-seed or early seed stage company. Me coming from a BA in economics and MBA, it was easier a bit to do it, before having a CFO on board. For a young company, but they decided to diversify some of the portfolio and offer access to startups as well. And before they decide to bring people on board, they introduced the investment to them. And before they understood there is an investment, we were validated by leading people in agriculture in Latin America and in the US. So in the due diligence process, we started seeing their connections and the people that helped them validate, not just as a finance or financial group, but they brought the subject expert matter to validate. And these subject expert mentors and partners are now helping us to get into Latin America with a more strategic outlook. And I think that for me, it's when your board of directors, with your investors and partners are in your field or coming from your area, they really help push the company and validate things. Not you're not. It's not alone. It's together. It's a team. It's a group.
What about your data room or about your process helped them get that conviction? Like, what did you guys do right that other founders could look at and say, hey, that's kind of something that we should copy or should think through? Was there something in the data room? Was it about like a video of the solution? Was it field trials? Like, what was the thing that you guys did that you felt did well that other founders will learn?
It was a video that explained the solution, so they could go to their to their capital sources and their validation process and understand what the solution is doing easily, because that's robotics, AI, human inspired, agriculture. It's not easy to understand. So you do need to have a simple video. And we had us in the front speaking about what we're doing. That was actually a part of a video we created to the EIC, that where you need to put and explain why you're doing it. So this kind of nature of video is something that we put forward. It was the validation and
Did you
background
guys get an
call.
EIC grant as well?
Not yet, no. But this is the format. We started
Oh, so
working on that.
you use the form. You basically use
We used
another
we just
application.
submitted to initial phase, and no, we won our Israel Innovation Authority pre-seed and seed both.
Okay,
Uh,
gotcha.
but this kind of video created the understanding or something you can put forward. They also saw videos, like I constantly shared videos from this is the thing. The thing is open communication channel. So we were, just before we moved forward, we did our pilots in in Israel, and then we did in California, in Ohio, and we constantly shared videos from the real time. Here's on the field, here is the team, here are the farmer spaces, here it is, here it is. You can't be with us all the time. You can come for a demo. It will be all structured and very nice. But the thing is to see the development week over week, what we wanted to have planned. Imagine that's almost a year from the first meeting to, everything concluded. But they needed to see the development. We had periodic updates. We had review of the budget. We controlled the budget. Not someone did this for us, but we built it bottom up and made sure that it makes sense top down. But it was a crafting that we did together. So I come with my first ask questions, we modified, ask questions, we modified, we fine-tuned. It was a mutual work to get it to the final version. And I think that, you need to come with a control and know your thing, know your assets, know what you can do, or estimate what you can do. You need to know that there are going to be questions to push you to your the boundaries or to extreme, and to understand what you can do and not, to have conscious and thoughtful discussions about why not and why yes. Eventually, you test if you can work together as a team in this process. So, this is what I feel that happened. We created a relationship, a work relationship. We had periodic discussions. I told you it took us to build process and approach which is more financial rather than just get to technology. It made us better in the process.
And then, if you were teaching another founder about that financial process, what did that mean by teaching a financial process? Were you basically building together with a prospective investor what the financial exit would look like? What is the revenue model?
I speak with founders raising every day, and they're all telling me the same thing. It's harder than ever to find investors who are actually deploying, and getting access to those leads takes time founders just don't have. Every month fundraising is a month burning runway. This is why we created FTW Plus, a community of founders actively fundraising. The world's most accurate agri-food tech investor database, plus connecting you directly to ideal target investors and a community of support and accountability. Guaranteed results or your money back. Apply today at www.joinftw.com/hub.
Yeah, I think that first I want to be a bit humble. I can't teach anyone. I only did 2 rounds, and it's a lot of teamwork. I constantly say that it's a lot of teamwork. It's your directors helping you be better, preparing you for the questions, making sure that your materials answer those before they come. They are put forward. But I think that at least I took a template that was for someone in a pre-seed, and I built on top of it. So I built a people tab, which was very detailed about why I need each person and when I need this person to join. I built a revenue program revenue model, which said which product and when I'm moving to the next product and when I'm doing hardware and when I can add the software. So there was like a logic, there was a plan, there was a strategy around why this was put forward the way it was. And then I created, and this is something I was taught in the process. I didn't know that, but we created cash flow analysis and with charts that will help us understand where exactly very easily to see where it ends and where you need more money. So I think it's having all these numbers stacked and worked and connected and everything is working, but also translating into a few slides that tell the story that someone can digest before they dive into the numbers. I think that here we have, family offices and institutional investors. So we needed to show when we expect to get EBITDA positive. We needed to show that unit economics is something we're thinking about it, even though we haven't, manufactured even one unit, or we know how to set the, the guidelines. You understand how or what are the complexities. And also we started doing smart capital stack. So we started speaking about project financing and not everything to be taken by investment. So where you can take a credit line for manufacturing as a bridge loan or just a credit line or a whole project financing. It's something I've learned in the past year, project financing in agriculture, project financing for assets, conversations with different financial groups. And some of those financial groups I wouldn't be introduced to without my investors. So I think I keep saying it's a teamwork, right? And everyone needs to put forward their network. Everyone needs to put forward their thoughts, with the hard parts and the good parts. But raising funds is something that is, we did this one and now we're working on the next one and the extension one and we're preparing for the A round. There's always something you don't know. There's always something you need to ask of what I don't know, what I missed, what I can help, or to be very open in the discussion to understand when you're missing it by the question you're being asked. So,
And Liron, first of all, I think the way you described having that people tab, having the how do you create blended finance or smart capital? Is VC capital being used for building hardware? Very hard, very hard to justify. And then who pays for the hardware? How do you give terms, right? For our listeners who needs to understand, if you look at John Deere or any of the big hardware players, they're functioning a lot of times as the bank for their buyers as well. They're acting as the bank, they're acting as the manufacturer, they're acting as a software support system. Like, you're dealing with a very complex way of financing hardware. This is not software, it's subscription SaaS service. You're dealing with something very difficult. How did you deal with the largest objection? What was the largest objection in the round, you would say? Like, what was the thing that you had to come back to again and again? And how did you effectively deal with that objection?
not from Harbor Venture. I think at maybe I don't remember. But I think that through the pre-seed, initially we raised the seed money. The seed was split into two. One was a grant from the seed from Israeli Innovation Authority, which was matched by investors. So that was a round of $2.8 million, and then we got the equity round. Harbor Venture put the first check in the one that matched the Israeli Innovation Authority. They wanted to see, to get in, to understand, to see how it's going. And then they led the round. So I think this is also something to allow your investors to grow with you is something really important. So even if they can give a big check, maybe start with a small one to allow them to get business even more and still have.
So this is actually really crucial for the listeners to understand. Something I think about a lot. I just came back from the Netherlands. Before that, a month before that, I was in South Korea. So it's like I look at a lot of the regional investment or global or government investment. Israel has a very, very interesting model of how they're supporting deep tech innovation, right? So, and the matching program is something. If you bring cash from the outside, they'll come in with a non-dilutive equity often. So there's a lot of really interesting tools that the Israel as a government uses to promote deep tech solutions. We see in the Netherlands, you have different tech instead. Italy has their own, South Korea has their own. So it sounds like you really did smart leveraging of initial check that was then unlocked local funding, and then that built the trust to enable more funding coming from the lead investors.
Exactly. And non-dilutive funding is crucial. It's something that, we tried, in the past 2 years. There's different versions. Take an agency to work for you, do it by yourself, find someone in your organization to be on top of it. I think it's a combination. In some places you do need an advisors, but in some places be on top of it. And make sure that the people around the company, also have the access to give you feedback and to see that if this is written properly and so forth. Be open and allow yourself, I think, with non-dilutive, it's sometimes you have the submission date. It's not always working, but don't wait for the last day. Allow people to read it, to feedback, to give you, candid reaction. But yes, this non-dilutive funding from the Israel Innovation Authority for the seed money was crucial for us. You need to remember there was, challenging situations here in Israel. We're speaking about December 2024 when we submitted. And yes, it was very important. It was crucial because the Israel Innovation Authority gives you the technological due diligence for those initial investors that, that someone checked it, someone reviewed it, someone certified.
I'll add to that in full disclosure. I worked for Yana Baya. We actually just received a 1.25 million grant from the Bird Foundation. So even if you're an Israeli, if in the United States company, you could actually do partnerships. If you're in European, there's different partnerships in place. So, but think about government as an ally to your process. Liron, so what I'd like to do is I just want to put out some like objections because like I know the space a little bit. Like we had some other great guests who are in hard tech software in Agtech. So do you mind if I just give you some objections that come to mind about your solution, and then maybe I think we can learn a lot about how you thought through these problems. Is that okay?
Yeah, and I just mentioned that I just didn't finish before, but when we raised the precedency, people told me you're gonna need a lot of money to get your first traction because it's robotics and hardware. So that was the major one. If you want to focus on that, you mentioned the VC, but I'm happy to discuss any others.
Yeah. So first of all, just a quick question on open field, right? I understand the ag tech is specialty crops, right? So which are usually maybe higher margin opportunities. Open field, like you have John Deere, right? You have these big players already working open field. Why focus on open field as a solution? There's a lot of big players who are focusing there as well. Why would a small startup that just raised 7.5 million be able to succeed in this stage when there's bigger companies out there who own that industry?
Well, that comes to how you analyze the market. The problem is weed control. The solutions being used today are either sprayers that create resistance from weeds and then affected the yield. 30% of the yield is damaged because weeds taken over crops and food security here really being affected. The second is cultivation, so very intensive turn of soil, which more, created a break to the soil and a biome issue, but moreover created an increase in weed pressure because when you turn the soil, you expose more seeds to the sun. Over time, by the way, in this action, you release carbon, you release moisture. The FAO released report just in November saying that this will affect food production in a cost of $300 billion in a year. And then the last option to use, mainly in high value crops, is people. And people, the new generation, just don't want to come and work in the field. And putting aside the geopolitical issue, putting aside the cost of it, there aren't people available to come. It doesn't matter if it's in Ireland when the Romanians won't come, or India when the Indians won't come, or US when they don't have Mexico people assistance anymore. It's all over the world. And when you look on the problems of cultivation and chemicals are creating, we're saying we want to replicate the most sustainable way over the years, over generations, which is the people. So we created a robotic system that analyzes in real time the field, make decisions in real time based on contextual intelligence, and making a decision which hand out of 20, which is like, a team, will be used to uproot weeds. So we're not trying to replicate what John Deere did with see and spray, like seeing and then spraying, or eco robotics with, precision spraying, or even carbon robotics, which is doing physical action, which is laser zapping small weeds. We're just replicating the person, the way they're doing it by hand hoeing with 20 hands in real time. It's simple, therefore affordable. We also took a go-to-market decision, which is different, which is saying we're going to start with the small, medium farms. We're going to do small solution first. So the unit behind me is self-propelled. I'm former executive in the automotive industry, so we decided not to do autonomous or electric at this phase in agriculture. It's great, but it takes time to get there. So we took a chassis from an OEM. Everything that I can buy, which is not my core technology, I'm not going to invest money in. And that's a learn from the past Agtech years. It's Agtech 2.0, the way we're doing it. It's different. We also decided to go to market through OEMs. So instead of me opening Italy separately and opening Argentina separately and so forth, I signed with Field, which has 8 logos from seeders to harvesters, and they will have AgriPass as their innovation.
So just take some reflection to our listeners. First of all, I think we could learn a lot from Liron, what she just did there. First of all, she has a very good understanding of her competitive landscape. She understands where the differentiation of her solution is, which is just really, really exciting. Also, she has a very strong sense of what the go-to-market is, right? So she's also taking off-the-shelf solutions and adjusting them with the core tech rather than building out the whole value chain of the hardware, which is very difficult. It sounds like you're taking a lot of the off-the-shelf solutions that already farmers are familiar with and adjusting them with your technology to make improvements. Is that correct?
That's correct. And also the idea is to simplify. So the technology part, the investment in the technology should be in a core and be adjusted. For instance, also manufacturing in 2027 is going to be in the regions for the regions to bypass some of the tax and the shipment, which got horrendous.
So what is the, just to give an understanding, what is the core IP? What is the add-on to the off-the-shelf solution? What is it? Is the
Off the shelf would be the chassis, the frame, the wheels, the way the vehicle is being driven, or towed by a tractor, which can every OEM can build a frame for you.
Yep.
And the core is having a bridge with the hands, a camera, and the computing. What is there on the software? This is the thing.
Last two questions, and this is really exciting. How do you look at the financing? Like, who's paying? When I hear the word small farmer or mid-sized farmer, is it the OEM who's financing the solution to the founder? So you don't have to act as a bank. The OEM will serve as the bank, and therefore, and then you're getting a royalty. Like, what does the financing look like of the solution, especially as a founder?
That's exactly the thing. The reason to go with an OEM is that they have their partner in financing, they have a distribution channel, they have manufacturing line. So we cannot be the bank at this size, never. And also to set, agreements with the big banks will take us time because they want to see who we are and how our product behaves. So it has to come with bigger players. You always have to play with strategic players beside you in order to get access to the market. We sold directly. We have tractions and we're delivering our first units directly to farmers in California and Ohio and in Israel. But we still, but those, the rest we're looking to have as through an OEM, distributors and so forth. And they already have the mechanism in place. We don't have to be the bank.
Yeah, I absolutely love that. So, Liron, I think it's a real masterclass in a way you really said, and I think you actually said something very interesting, which maybe will be the last question, which is this Agtech 2.0. Right, expand on that because there's a lot of learning that you've actually done from the previous, say, 2021, 2020, 2022, 2023, 2024. What have you learned, and how are you applying those learnings towards creating value for the investor?
Learn that you have to put your boots and go to the farmers one by one, ask the questions a few times, different farmers. From there, go to your ideal customer profile. When you move away from your ideal customer profile, you're being burned. And you're getting a hit. So keep focus on the ideal customer profile. I've learned that if everyone did the same and got the same result, try to come differently. Otherwise, why do another startup? You ask me. So a lot of them rightfully focused in California, which was the bowl, the vegetable bowl, everything is there. You open the USDA, even today, they will tell you that California is the major on that. Without having the boots on the ground, you wouldn't understand that there is transition, that 4,000 acres moved to Mexico, to others. So in order to build a real go-to-market, I think that my fellows did this in Agtech before, but there was like a whole a whole move to California, a whole move to the same accelerators, a whole move to sell first to the big farmers. The reason I didn't want to sell to the big farmers is because I sold before to enterprises, $5 million deals and others. It takes 18 months, and there's no way that a small startup will start by selling to those. You need those that are susceptible to change. You need those that are innovators. You need those that will be patient when it's not going to work. And it's not going to work at the beginning. So you need those as your first customers. And this is why you need to have a gradual go-to-market. And again, I want to finish by being humble. We got to this point. It wasn't easy. It's my team. It's the team that is pushing every day, every hour, sometimes against all odds. We have different events happening here, change of schedule that we do not control, costs that are changing on shipments and others, and you need to deal with it. And it's a great team that's making it happen, and we're doing it step by step. And we hope that everything we've done will take us forward.
Well, clearly you thought through this very, very deeply, and how can we thank you, right? You've given us a lot of your wisdom and interest. How can our listeners thank you? What are your current needs in the next 6 to 12 months? And what can our listeners do to get back to you?
Well, as I mentioned, partners, even strategic partners that are from agriculture and can, work with us to understand how we can fit their business, would love that. If those are investors, then we have an open safe now that you can join if you are strategic, and that's a great opportunity to be part. Network and introductions. We saw that this is working, so bring it on. More.
Thank you so much. Thank you.
Thank you very much, Alex, for having me.
One more thing, don't close this episode yet. If you got value from this conversation, here's what I need from you. A 5-star rating, 1 comment, 20 seconds of your time. That's the deal. A 5-star rating means more founders find this content, and every time a founder raises, all boats are elevated. Every week, I pick one random comment and send that person a complimentary copy of Investment Climate, the book. 50 sales playbooks from founders who actually raise money during the fundraising winter. Real strategies, real closes, real numbers, not theory. So if you want a copy, comment below, and if you haven't followed the show yet, do that too. And if there's a guest you want us to bring on the show, just drop us a note or send us an email. We'll read each and every one. Until then, keep on raising.